If you could just look at 3 things from all the chaos of price action to know whether you have a high quality setup or a low quality setup, what would you look for? To be successful day trading, you only need 2 things. Number 1 is know where the daily candle is headed. And then number 2, look for an optimal entry as price is headed in that direction. And in this video, we are going to focus on only those 2 things, where the day is headed and where to get in as the day is heading in that direction. If you're new to the channel, subscribe. Let's jump into it. Number 1 is predicting the daily candle. Now, if you want to catch the highest quality setup, then for me, I usually tell myself that 1 trade per pair per week can give me the highest probability setup if I wait for that right setup. So what is that right setup? The first thing that we use is what we call a failed breakout. Monday, as usual, sets the high and the low of the week. And if I am to catch the most high probable setup, then I want that specific day where price is reversing. So how do we catch that? So if Monday sets the high and the low of the week, then we don't trade on Monday because we just observe it. Now, on Tuesday is when we look for that signal day that will tell us where price is headed on Wednesday. So that is the high and the low of the week, like that. And we shall separate it with this vertical line so that you can see the end and the beginning of the day. And then on Tuesday, price breaks out and then closes back inside of the range. And this same scenario can also happen on the daily candle if you don't understand the 15-minute time frame. This one is the 15-minute time frame, this one is the daily. And so that is 1 candle like that sets the high and the low of the week. So that is Monday. Now on Tuesday, price breaks out. So price opens here and then price breaks out. So this move here, price breaks out, but at the end of the day, rather than closing outside like that as a breakout, what happens? Price comes back inside of the range and closes like that, and that is what we call a failed breakout. Now, you can see that looks like a pin hammer or a hanging man. That particular candlestick you learned in Baby Pips that tells you it's time for a reversal. Now, if you see this, or if you see this if you're using the 15-minute time frame, then there's a very, very high probability that the next candle price is going to reverse. And for us, our goal is to be able to catch this particular candle. If we look at gold last week, we have Monday started here, setting this high and this low. So we have the high and the low of the week set on Monday. And then on Tuesday, price breaks out and then closes back inside of the range, which gives us a failed breakout. And then, which means that the next day we look for an opportunity to sell. Now, let's look at it on the daily again, so that maybe if you don't understand the 15, you might understand. We can see this bullish candle here. This is Monday. So Monday set the high and the low of the week. And then Tuesday pins the high. So you see Tuesday pins the high, which means at some point it had broken out of that high and closed back inside of the range. So now we have a failed breakout. High of the week, failed breakout on Tuesday. So our goal is to be able to catch this particular candle here. I must tell you that this particular strategy has about a 50% to 60% accuracy. This does not mean that every time you see a failed breakout, you are going to see a reversal. It's just a game of probabilities. Now that we know where the market is headed, how exactly do we get in? And we use a setup called the pump and dump setup. This is what the pump and dump setup looks like. For example, if we have a sell bias, we are looking for that red candle the next day. What we want to see is first an explosive move up, which is now called the pump. Price is pumping, and then once price reaches that high, we want to see a consolidation before price breaking out for the reversal. So this is the pump, this is the dump. And it was a textbook setup on gold on Wednesday once we had that failed breakout. So you can see that we have this pump. So we have pump, pump, pump to the high. Once price reaches the high, we have this area here where price is consolidating. And then at 8:30, once we had CPI, price broke out and boom, price just continued breaking out to the low of the day. This also happened on GBPAUD on Friday. We had price closing on Thursday as a failed breakout. Price broke out of the high of the week, closed back in. And so on Friday, we are looking for an opportunity to sell. So we are looking for that pump and dump setup. What do we see here? We see price pumping up, pumping up, pumping up. And then we have this level here where price is consolidating. So the moment price broke below this level here, the moment price closed there, that was your entry, stop loss above that candle, and then you are targeting the low of the day. So basically what we've done is we've been able to predict where the daily candle is headed, and based off of the pump and dump setup, then we can look for optimal entries as price is going down in that predicted direction. If you want to learn this strategy in detail and you want to work one-on-one with me, check out the one-on-one mentorship program. It's paid, it's not free. If you want the free resources, I also do daily live streams on Telegram. Link will be in the description. If you got value from today's video, subscribe and I will see you in the next video. Peace out.